dignitaries present here. I, C.A. Jitesh Lulla, once again welcome you all to Arohan, the first ever sub-regional conference hosted jointly by the Akola and Amravati Branch of WIRC of ICAI. This event is powered by Prithvi Corporate Solutions and co-powered by Vayana Private Limited, Bond Bazaar Securities Private Limited, Buldhana Urban Cooperative Credit Society, Bank of Maharashtra, DR City, a project by Deep Rajam Infraspace LLP, Tapadia City Centre Mall and State Bank of India. Now today's session topic is of interest to many of the members present here, and that is charitable trust. Major issues faced by the members in this sector are related to how the trust should be registered under Section 12, how to claim exemption under Section 80G, what things should be taken care of for registered charitable trusts, types of risks faced by the trust, concept of exit tax in charitable trust, and what will be the consequences if not applied for renewal of registration, and the list goes on. To guide us on this topic and help us understand the practical issues and their solutions, we are very lucky to have with us a proficient member who is known for his immense knowledge and also for his years of technical expertise in this subject, the past president of ICAI, C.A. Nihar Jambusaria sir. So now to kickstart the session, I would first request C.A. Sunil Alim Chandani sir, Secretary of Akola Branch of WIRC of ICAI, to escort RCM C.A. Sanjay Nikam sir to the dais. Guys, please welcome them with a round of applause. I would request C.A. Sumit Alim Chandani sir again to escort RCM C.A. Abhijit Kelkar sir and raise the dais. Now I would request C.A. Seema Baheti ma'am, Chairperson of Akola Branch, to escort our speaker for the session, C.A. Nihar Jambusaria sir, to the dais. I extend my heartfelt welcome to you all, sirs. Now I'd like to call upon C.A. Mithun Tekari sir, past chairperson of Akola Branch, to welcome our past president, C.A. Nihar Jambusaria sir, with a floral bouquet. Now I'd like to call upon C.A. Vinod Tambi sir to welcome RCM C.A. Abhijit Kelkar sir, who is also the session chairperson of our today's session, with a floral bouquet. I would now request C.A. Rajesh Chandak sir to present a floral bouquet to RCM C.A. Sanjay Nikam sir, who is also the session coordinator for our today's session. Thank you, sir. I would now like to call upon our distinguished Regional Council member, RCM, CA Abhijit Kelkar sir, Chairperson of Committee on Economic Laws and Economic Advisory and Vice Chairperson of Committee on Public and Government Financial Management, to give opening remarks.
Namaskar. Respected past President and Speaker for the today's last session of this wonderful sub-regional conference, Shri Nihar Jambusaria sir, my colleague in the council, CA Sanjay, CA Bhushan, seniors in the profession and my dear professional colleagues. At the outset, let me compliment the Akola and Amravati Branch for wonderfully hosting this two-day sub-regional conference in this auspicious land of Sant Gajanan Maharaj. Compliments and kudos to entire team members who are in front and behind for such wonderful arrangements. Well, we are already running short of time, and as it has been said that the best is always kept for the last. So we have the last session on the best topic, that is on trust, and the speaker none other than Nihar Bhai to deliberate on the same. I believe so far as trust are concerned, the audit as well as the taxation of trust is very peculiar in nature, and I am also aware that very few, though many of us are auditing and doing taxation work of the trust, but many few of us are actually knowing the intricacies of the taxation of trust is concerned. So far as audit is concerned, we are even held as a public servant so far as audit of trust is concerned, which is not otherwise in other audits. So one has to be very careful while doing audit of the trust. And so far as taxation is concerned, all are aware many changes are already there in the Act, and the practitioners are very much worried whether applying these provisions to the trust are concerned or even the compliance part is concerned. As to my knowledge, even the site is not updated, many forms are not available so as to do your compliance. So a very apt session, very wonderful speaker we have, and I believe those who are attending will be immensely benefited by his words of wisdom so far as this particular topic is concerned. So I leave this house open for the wonderful deliberation by Nihar sir. Thank you so much.
Thank you, sir. Now, before we proceed with the technical session, it would be my honor to give a brief introduction of our past president, CA Nihar Jambusaria sir. Sir qualified as a chartered accountant in the year 1984 and was in practice for nearly 27 years. He held the presidency of our alma mater, ICAI, for the term 21-22. Sir has now been appointed as the president of South Asian Federation of Accountants, a network partner of International Federation of Accountants, for the year 2023. He has represented ICAI on Integrated Reporting Council and had also been a member of very important committees constituted by the Indian government and regulators relating to policy formation that include Government Accounting Standards Advisory Board and Audit Advisory Board, both constituted by the CNAG of India. Sir is now also acting as the Vice Chairperson of all the standing committees, including Executive, Finance, Examination Committee, besides being the ex officio member of all the non-standing committees of ICAI. He is also the director of the ICAI Research Wing, ICAI Accounting Research Foundation, and Extensible Business Reporting Language, India. Sir has also been nominated for the Services Sector Division Council of Bureau of Indian Standards and Chairman of Accounting and Finance Services Sectional Committee of BIS. Sir has also been nominated on the Review Committee for the BCom Honours and BCom Commerce syllabus for all the universities in the country by the University Grants Commission. Apart from all these accolades, Sir is also a prolific speaker and has spoken at both national and international forums and has addressed more than 900 seminars and conferences so far. covering various topics of professional interest like direct tax, accounting standards, international tax, professional development and alike. Sir, given your extensive professional experience, erudition and technical expertise, I'm sure we all would learn a lot from you in this session. So now, without much further ado, let's hear from you, sir. Let's welcome you again with a big round of applause.
Good evening, everybody. CA Vijit Kelkar, CA Sanjay Nikam, CA Jitesh, all the WIRC members sitting in the front row and the participants. To save time, I will omit mentioning each and every name. But at the outset, my compliments to each one of you who is present in the auditorium for being present in the last session, which has already been delayed. And of course, CRP Kabra, Chairman of Western India Regional Council. In fact, my session was scheduled originally at 11:15 in the morning, but suddenly today an important webinar of the council came up, and I could not deny being on that webinar because it was important from some strategic representations that institute has to make. And then it was decided to shift this session in the last. However, let us try to catch up on the latest developments on charitable trust taxation. Now, I remember the time when I qualified in 1983, and at that time, charity trust provisions were treated charitably by the assessing officers. Suppose the charity trust in those days made any default, and we used to tell the officer that, see, these trusts are meant for public purpose. So you ignore whatever has been omitted, and the officer would gracefully say, okay, next time dhyan rakhna. But time has changed, and time has changed ever since there was amendment in the Companies Act and CSR provisions came in. When companies started outsourcing charitable activities to charitable trusts, the budget and the turnover of charitable trusts increased manyfold, and if you look at the volume of operations of these charitable trusts, you will find that some of them are operating as if they are companies. And then government started thinking that the liberties which were given to charitable trusts cannot be continued anymore, because if this is the volume of operations, probably there will be a lot of tax evasion if we do not control the charitable trust taxation. So a number of amendments were introduced, and I will show you later in a slide that all major amendments have come in from the year 2020, when we were all caught in pandemic time. And in those days, certain charitable trusts did major activities to help people. At that time, government was busy modifying the provisions of taxation of charitable trusts, and thereafter, year after year, they have amended the provisions. 20, then 21, then 22, and again in 23. Fortunately, in 2023, if you look at the amendments which are made, they are in favor of charitable trusts. One or two of them are in favor, but majority of them are to strengthen the what we call लगाम खींच के रखने के लिए amendments आए. So let us first look at all these amendments. I will not discuss the basic concepts of charity taxation. Section 11 everybody knows, 12 and 13 everybody knows. But what will be the impact of all these amendments? Certain new forms, re-registration, all these processes which were introduced, in what way it will impact charitable trusts. And today the situation has come when we audit charitable trust accounts at the end of the year, we find that all these amendments were not known to them. They have made many violations, and as a result, they may suffer in terms of taxation, they may suffer in terms of levy of penalty. So I will not focus more attention on filing of forms, except that There are one or two forms which are not available on the website, or there are some circulars which are exactly in contradiction of the provision in the Act. Except for that, we will focus on what amendments are adverse, what care is required to be taken, what amendments are favorable, and going forward, what care every charity trust will have to take. In addition to all this, we had a Supreme Court decision in the case of Ahmedabad Urban Authority. And this judgment is very significant. In fact, this judgment would require entire 1 hour, 1.5 hours to discuss this judgment itself. Because if a trust is engaged in business, what will be the treatment for 5 categories of entities? The judgment has discussed what will be the impact. I will not be able to cover it fully, but I will only request those branches which are present here to organize one full day seminar on charity trust. Now charity trusts are no longer small entities, and particularly chartered accountants I know in this area practice, and they have audits of charity trust, they have taxation of charity trust, and this will be very useful to them. So all these finer aspects, if you want to cover, you may have full day webinar, full day seminar in whatever form you want to do it. If any time on particularly the Supreme Court decision you want me to speak, I can speak on a webinar. If you want to connect your members, maybe after another 15 days, 1 month, 1 week, whenever you desire. So let us now look at these amendments. First, there is just a laundry list of the provisions which are applicable. Now tax exemptions are covered for those charity trusts which are registered under section 12AA or 12AB, and under certain conditions, under section 11 of the Income Tax Act, their income will be exempt. In other words, in section 11, a number of conditions are laid down which are required to be fulfilled to claim this exemption. Secondly, tax on business income. If a charity trust has business which is incidental to charitable objectives, the business income will be taxable as business income separately, except in the case of those trusts which are not general public utility trust. I will elaborate on this in detail when later we come to this particular slide. Then rental income in the case of a charitable trust is taxable, but again it is included in the overall receipts for charitable purpose. Many trusts let out their properties and they earn rental income. So rental income also, if applied for the purpose of for the objects of the trust, it would be eligible for exemption. Then tax on capital gains. Tax on capital gains for any charity trust is to be computed and is to be paid as if it is capital gain earned by any other category of SSE, individual, partnership firm, limited company. So capital gain will be computed in that manner. And GST registration is required for a charitable trust if it is engaged in providing services or supplying goods, if it is engaged in trading or providing services. Now this line, I am not dealing with indirect tax, but this line I have added only to just showcase that all those who are under the impression that charitable trusts are not liable for indirect taxes, that impression is not correct. If any trade or service is covered within the ambit of GST, even charity trust will have to register under GST and will have to pay GST. Then let us look at the exemption provision and sum these up. Amendments are covered little later. Section 1023C, any trust which is created for educational or medical purposes, it enjoys full exemption. However, it is required to be registered under section 12AB. Subject to that registration, it will get exemption. Section 11, all charity trusts are eligible for exemption under section 11, subject to the major condition that 85% of its receipts, it has to apply for the objects of the trust. If it does not apply, 85%. Then excess over 15%, which is accumulated, which is not applied, it will be treated as income and it will be taxable. Section 12, income from donation, voluntary contribution is also considered to be income from charity, and it is to be included in the normal income of a charitable trust, and it is eligible for exemption if it is applied for the objects of the trust. Section 13 in fact is a section which covers negative conditions. What a charity trust should not do, like the savings. Charity trust cannot invest in any mode of security other than those specified in section 11 subsection 5. Charity trust cannot apply its income for the benefit of interested persons. So if any person is a trustee or a major contributor, major donor, the income of the trust cannot be applied for their benefit, otherwise the trust will lose exemption. Again here major relief is given. I think it is audible or? Yeah. So major relief is given by the Finance Act 2023. We will discuss when we come to that slide. So with this, let us start with 11.1. Income from property held under trust. So any sum payable by any trust or institution. Look at these words. This is a major change, and many of us think that if I maintain accounts of a charitable trust on accrual basis, expenses which I have recorded and which are not actually paid, but I have provided for the expenses on accrual basis, they will be treated as application of income. This is not correct. Look at the amendment, what it says. Any sum payable by any trust or institution shall be considered as application of income, revenue or capital expenditure in the previous year in which such sum is actually paid by it. So if it is not actually paid, it is not to be treated as application of income. You may, if you are following the accrual system, provide for the expenditure in books, but it will be treated as application of fund only in the year in which it is actually paid. So this is important. Now, one very important point, although amendment took place in 2015, I will draw your attention to that amendment so that there is no misunderstanding. Now, section 11 subsection 1 says, all expenses which are incurred and which are applied for charitable purposes, they are eligible to be deducted from gross receipts. They will be treated as application of fund. But most of you would remember it is an old amendment in the year 2015. Prior to 2015, what we used to do, try to remember, suppose a trust, take example of a school or college. It installed furniture in classrooms, say benches, and 50 lakhs expenditure was incurred. In those days, we used to claim 50 lakhs as application of fund. It is capital expenditure, but in scheme of section 11, there is no distinction between capital and revenue. So we used to claim that 50 lakhs as application of fund. And also on that 50 lakhs, year after year we used to claim depreciation. So double deductions were claimed, double deductions were allowed. Then the government realized this on the basis of feedback from the department that charitable trusts are claiming two deductions and you must restrict it. So in 2015 amendment came that if you have claimed capital expenditure as application of fund, then you will not be allowed depreciation. But if you don't want to claim application of fund in respect of the entire capital expenditure, then on that entire capital expenditure you can claim depreciation year after year. So this is the amendment. So although section 11(1) says that capital expenditure is eligible to be treated as application of fund, remember then you can't claim depreciation on it. Then some contributed to other trusts. with similar objects as a corpus donation shall not be considered as application. I think this amendment came in 2022 and I have prepared that slide which gives which amendment came in which year. So at present, let us not go into it. But if one charitable trust in the past gave donation to another charitable trust, whether that donation was given generally or it was given towards the corpus of the trust, the donor trust used to get this as deduction as application of fund. Now there is a restriction that if you donate, if a charity trust donates any amount to another charity trust, it should donate it generally. If it is donated towards corpus of the trust, it will not be allowed as application of fund. So this is a very important amendment. All those who are not aware, please note it. Previously we never thought, because see many times in my trust, if there is surplus amount, I am not able to spend it. In the past what I used to do, donate it to another charity trust towards the corpus. So there will be no obligation of spending. So here I will get it as application of fund and there the other trust will credit it to corpus. It will not be treated as income of that trust and it will not have any spending obligation. So what a general donor has given to one trust as voluntary contribution, this trust by donating it to another trust was converting that donation into donation to corpus. Now this is not permitted. As I told you, and I think here government is reasonable, because otherwise every charity trust would do this. If I am unable to spend in my trust, I will donate it to another trust as corpus donation. So this is stopped now and we cannot do it. Otherwise, we will not get this as application of fund. Next is application from loans shall not be considered as application. But repayment of loan out of the income of the trust shall be considered as application. This has also come through amendment in last 2 years. That previously, a trust would obtain loan and from that loan amount, the trust would use the money for the objects of the trust and it was treated as application of fund. Now many times what used to happen, that in the case of a trust following accrual system of accounting, suppose some donations or some, many charity trusts used to do charity show and the sponsors used to pay after 2 years, 3 years. So what many charity trusts used to do, those donations were recorded as income on accrual basis. But the trust did not have fund to apply it for the objects of the trust. So instead of using the option available under section 11, the trust would obtain a loan and spend from the loan. When amount was spent from the loan, it was treated as application of income. Realizing this, now they have provided that if you obtain loan and spend on the objects of the trust, it will not be treated as application of fund. But the year in which the trust out of its normal income repays the loan, when the loan is repaid, it will be allowed as application of fund. Another important amendment, many times in the past we have used this source of loan for making the gap of application of funds. Now you need not do it. Now you may ask a question that suppose somebody has promised me sponsorship fee, but by the end of the year he has not paid the sponsorship fee. I am following the accrual system of accounting, I will record this as income. And if I don't have funds, how will I spend? So section 11 gives you option that you exercise the option of spending this donation in the year in which it will be received or in the year next following the year in which it is received. Now you have to fill up, you have to intimate the assessing officer by the due date for filing the return. So if you take example of financial year 22-23, 50 lakhs donations you have not received. You intimate to the officer before 30th September that 50 lakhs will be spent when the donation will be received in the year in which it is received or in the next following year, you have that option. So it is not that this money will be taxed just because you can't take loan and spend out of loan. So instead of taking loan, you defer its application for the objects of the trust. And if you obtain loan and spend, the year in which you repay the loan, you will get the deduction. Again, when you obtain loan and use that loan for the objects of the trust, out of the income of the trust, the loan is required to be repaid within 5 years. If you pay after 5 years, when you repay the loan, it will not be treated as application of fund. So this also is an important time limit which you need to note carefully. Within 5 years, this loan must be returned out of the normal income of the trust. Accumulation of income. Again, very important amendment to the Finance Act 2023. Recently,
Sir, I was waiting for the previous one. Sir, the one trust cannot donate the funds to the another trust as a corpus. But now suppose a religious trust donates the funds for the infrastructure development of another trust or another temple or another religious. Whether that will be allowed. The reason specific for donation or the transfer of funds is development of that another temple or another religious trust. For that the funds are being transferred or donated.
so in that case, if the other trust treats said donation and credits it in the income and expenditure account, you can demonstrate that it has been taken in the income of the other trust. You will get deduction. But if the other trust credits it to the corpus, then you will not get deduction. When the other trust receives, say for infrastructure development, normally what happens, infrastructure development takes 5 to 10 years. So the trust, in the year in which it receives the money, it will credit it to corpus, and out of the corpus it will go on spending for capital expenditure. So in that case, the donor trust will not get any deduction. Although in the letter you may say that this is meant for development of infrastructure, but the recipient trust should credit it to the income and expenditure account, then this trust will get it as deduction, as application of fund. Otherwise it will not get it. That is the condition. Now this is the amendment to Finance Act 2023. See how important it is and what they have done. Up to last year, what charity trusts used to do, that suppose in my charity trust I am unable to apply 85% of the income for the objects of the trust, I would donate, say I am able to spend 50%, 35% I would donate to another charitable trust. So I will be considered as applied 85% for the objects of the trust. Balance 50% I can accumulate, it is not taxable. But then the other trust which receives this 35%, it would again get chance to spend only up to 85%. Because take for example, my receipt is 1 crore. I have spent 50 lakhs for the objects of the trust. 35 lakhs I am donating to another charitable trust, not as corpus donation. So I get deduction of 85%, 15% is not taxable because 15% can be accumulated by any trust. Now the recipient trust, which gets 35 lakhs, it is required to spend only 85%. So in other words, entire 35 lakhs the other trust is not spending. So now what they are doing, that if I donate any amount to any other trust, not towards corpus, I will get deduction of only 85%. I will not get deduction of full 100%. So in my example, suppose I have donated 35 lakhs, my trust will get deduction of 85% of 35%, 35 lakhs. It will not get full 35 lakhs as deduction. If I want to claim 85 lakhs as application of fund, instead of 35 lakhs, I will have to donate 40 or 45 lakhs. So that 85% comes to 35 lakhs and I can claim full deduction. So another important amendment, one should not ignore, otherwise for next year the trust will get addition even under section 143(1). They will make the adjustment automatically if there is donation to another trust. The income accumulated in excess of 15% is required to be invested in the securities specified in section 11(5). Now you know that mutual funds, certain government bonds, and very recently those digital bonds are notified 15 days back. Only in those securities you can invest this accumulated 15%. Fund accumulated in excess of 15%. You know how it is to be done and how it is allowed. Under section 11(3), if suppose you are unable to spend 85% of your receipts, say you have spent out of 1 crore only 50 lakhs, and 35 lakhs you want to accumulate for a specific purpose to be spent in future, say for constructing school building, college building, hospital, then you can fill up that form number 10, intimate to the officer that you want to accumulate 35 lakhs. Then this 35 lakhs you have to spend for the purpose for which you have indicated in form number 10 within a period of 5 years. If you don't spend it within 5 years, then in the 6th year it will be taxable as income. Now this 35 lakhs, see my income is 1 crore. 50 lakhs I have applied to the objects of the trust. I am supposed to spend 35 lakhs more which I have not spent but I have accumulated. This 35 lakhs is lying in my bank account. The trust can invest this 35 lakhs only in those specified securities under section 11(5), and they are all government securities or mutual funds. If you invest in shares, then 35 lakhs will be taxable. So you can't violate that condition.
In equity mutual fund?
Sorry?
Mutual fund, equity mutual fund.
Yeah, those which are specified in 11(5), just see the categories which are.
In they are mentioned, mutual fund mentioned under section 1023D.
Yeah. In 1023C they have mentioned.
They are not mentioned whether debt or equity or hybrid.
Yeah, so through mutual fund, investment in equity mutual fund is allowed. But direct investment in equity shares is even not allowed now with so much of liberalization. Because it is risky investment, so they don't allow. Yeah, Gandhiji.
Investment in some banks is also allowed. Scheduled banks, risk is there.
Can't hear. You can speak a little
Scheduled bank,
loudly.
investment in scheduled bank allowed.
Investment in?
Scheduled bank.
Yeah, that is allowed. Because even if your money lies in bank, in scheduled bank, there is no problem. Only the interest on it will be taxable. That is different. It is allowed. Sorry?
Whether investment in shares is allowed?
Not allowed. Investment in shares is not
It's
allowed.
the amount that is being received for a specific fund, which generally a trust keeps it into FDs, something like that. That amount invested into mutual funds or the shares.
Then mutual fund may invest anywhere, but mutual fund you can always encash. Again, you will have to look at the list which is there in section 11(5). It is not generally that in any mutual fund you allow. There are specified categories. So you have to simply open the list and see whether the investment falls in that category. See, scheduled banks deposits are covered. So you can, see, normally a charity trust will not keep money in saving bank account. But suppose you want to invest in fixed deposit of a scheduled bank, you can do that. If you want to invest through mutual fund and it is a specified mutual fund in 11(5), you can do that. Then some RECL bonds and some other bonds, they are very specifically designated and said that they are notified under 11(5). So you have to see that list and invest.
Yeah. Thank you.
So one small question. Sir, as you say that only 35% in your example needs to be applied as per section 11 subsection 5. So what about 15%? So does that mean 15% I can invest anywhere?
That 15% by implication you can invest anywhere, because they have now very specifically said that you have to invest excess over 15% in specified securities. So by implication that 15% you can invest anywhere.
Including mutual funds, including shares, or even by way of giving loan to other parties.
Yeah, you can do that. Previously there was a general restriction in section 13 that no investment in any category other than 11.5. Now they have incorporated these words. Excess over 15% must be invested in specified securities. The next is income includes business income run by the trust, and to claim exemption, these conditions must be satisfied. Now please look at this condition. Again, this is a very important aspect, that business is incidental to the attainment of objects of the trust and separate books of account are maintained. Now one point I have not incorporated here. See, if it is a charity trust for specified objects, and you know in section 2 clause 15 which defines what is charitable purpose, educational, medical relief, yoga and certain other activities are specified activities. If the trust is created for those specified activities, then it can carry on business which is incidental to the objects of the trust, maintain separate books of account, and even this business income will be eligible for exemption under this section. But if it is a general public utility trust, not a trust for specified purposes like education, medical relief, yoga and 3-4 other categories are added. It is not for those specified categories. It is a GPU, General Purpose Utility Trust. Then business can be carried on which is incidental to the objects of the trust. But the turnover or receipts from business should not exceed 20% of total receipts of the trust. If the business income exceeds 20% of total receipts, then business income will be fully taxable at normal rate. It will not be eligible to get application of fund of the amount spent from the income of the trust. So this is a distinction between the two trusts. Section 215, section 2 clause 15 defines charitable purpose, and there trust for specified objects and general public utility trusts are bifurcated. So if it is a GPU, then remember business may be incidental to the activities of the trust, but its total turnover cannot exceed 20% of total turnover of the trust. Otherwise it will lose exemption in respect of business income. Then specified investments, as I told you, that you have to look at the list which is notified under section 11.5. So this is not something for discussion. You can simply open the notification, see whether a particular investment is covered or not, and accordingly decide whether you want to invest in it. Then voluntary contributions, you have to divide in 3 categories. Corpus donations, donations received towards the corpus of the trust, it is not to be considered as income. So if your total receipts in a year is 1 crore, out of which donors for 50 lakhs have given it to the corpus capital of the trust with a specific direction, you will credit only 50 lakhs to income and expenditure account. 50 lakhs which are given to the corpus of the trust, you will credit to the corpus straight. It will go to the balance sheet. It is not to be treated as income. Anonymous donation, it is not taxable for religious trusts. See, previously when they brought this provision, they said that if donation is anonymous, means you have received donation but you don't have name, address, pen of the donor, it will be treated as anonymous donation. A charity trust, which is a religious trust, can receive anonymous donation because representation was made to the government that in a temple, if people come and keep money, for example, in Tirupati Balaji, lakhs and crores of rupees donation is deposited in cash by those who come for worship. You do not know whereabouts of these donors. So religious trusts are exempted. They can have anonymous donations. But if any trust other than religious trust receives anonymous donation, on anonymous donation, tax will be payable under section 115 BBC at 30% straight, flat rate. So one has to be very careful. And third is other donations. These are considered as income of the trust. And regarding other donations, just 1 minute, you have to spend 85% for the objects of the trust. Yeah, Agarwal.
Both objects are there, sir. Religious and other.
Sorry.
Might, or less.
Object of the trust is both religious and other. What will you position, sir?
So in that case, you will have to maintain separate records of donations received in the temple, and to that extent, it will be exempt. Of course, one can play mischief, take anonymous donation in the trust and say that this was deposited in temple, and there could be dispute and officer may challenge. So it all depends. As long as they don't do survey, probably this argument one can put up that in my temple this was received. Again, for religious trust, only one line of precaution, that the religious trust may have idol of any god, but it should be open for any religious caste or community. If it is made only for Hindu, only for Muslims, only for Sikhs, then again it is not eligible for exemption at all. But a religious trust having idol of any god, but if it is open for any person in India to come and do the worship, then it will be eligible for exemption under section 11. Then next is value of service to specified persons. Under section 13(3) is deemed to be income chargeable to tax. So whether it is free of cost or at concessional rate. Section 13 subsection 3 provides that if any service is given free of cost or at concessional rate to a trustee, to a substantial donor, or to any related person, then trust will lose exemption. Now, through Finance Act 2023, an important relief has been carved out. Please note this. We all have seen this provision as it originally existed. That once you spend the income for the benefit of interested person, the trust loses complete exemption. And it was pointed out to the government that this is a draconian provision. Suppose a trust receiving a crore of donation spends 5,000 rupees for the benefit of interested person and trust lose exemption in respect of full income. It is not justifiable. What kind of relief you are giving to charitable trust? Through Finance Act 2023, they have made an amendment and they have provided that now to the extent of amount spent for the benefit of interested persons, exemption will be lost. That amount will not be treated as application and that amount will be chargeable to tax. But the full exemption will not be lost to the trust. So this is an important relief. Some trusts many times have applications from trustees or related persons. If they need some service, if it is given free of cost, now onwards to the extent it is given free of cost or at concessional rate to the interested person, you will lose exemption, but complete exemption will not be lost. A significant relief has been made by this provision. Now, cases when income will not be exempt under section 11. This again we have done for so many years. I will just repeat for the purpose of revision that no benefit to the public. If the trust is not providing benefit to the general public, it will lose exemption. Benefit is only to particular religious community or caste, trust will not get any exemption. As I mentioned, trust should be for any community or caste. But again, a trust can be formed for the benefit of backward class or backward tribe, scheduled caste or scheduled tribe, but not for only Hindus, only Jains, only Muslims, only Sikhs, only Isai, not for any religious community particularly. Gross receipts from business trust, as I said, should not exceed 20% of total receipts for trust with object of advancement of general public utility. So again to repeat, trust for specified purposes, educational, medical relief, yoga trust, they can have business income up to any extent, but GPUs cannot have business income exceeding 20%. Funds accumulated in investments other than those mentioned in section 11.5. No anonymous donations will be taxable under section 115 BBC at flat rate of 30%. And no exemption if no books maintained, no audit done or no return filed after due date. Now, if you want to understand section 11 generally, I think this one slide, one may keep before the eyes whether exemption is available. If any one of these conditions is violated, exemption will not be available. So one must note it. Again, let me make two changes. See, this says that funds accumulated in investments other than those specified in 11.5 up to assessment year 21-22, full exemption was lost. Even if you invest 5,000 rupees in non-specified investment. Now they have amended with effect with Finance Act 2023 that if you have invested 1 lakh in shares, income arising from that investment will not be eligible for exemption. But income from other investments which are as per section 11.5, you will be eligible to get. So this again is a major relief, and one may note. Then re-registration, this time has gone. I will not spend time on it. I hope all charity trusts, existing charity trusts need re-registration. And now you know that after you have done re-registration, every 5 years you have to register again. And before your 5 years end, 6 months prior to that, you have to make application for re-registration. So if there is nothing against the trust, continuation of registration will be granted. But if you lose registration, then there are serious consequences. The accredited tax will have to be payable. It will be treated as a trust which has converted itself from charitable to non-charitable trust. I hope you remember those provisions that whenever a charity trust goes out of charity and becomes a normal private trust, the entire accumulated income which is represented by assets, its value will be liable for tax. So a trust cannot afford, again institute represented to the government that this particular provision, suppose somebody misses registration on the due date and for some period the trust is not registered, you cannot levy accredited tax on the entire asset value of the trust.
Market value.
So,
entire market value.
Market value, yeah. On the fair market value, so if the trust is land and building, the tax liability could be very heavy. Market value of these lands or buildings which were acquired 10, 15, 20 years back could be phenomenal. So here this representation is still pending. They have not considered. Let us hope that they will bring out some relief, that within a particular time, if registration is reobtained, they should give relief. At present there is no relief. And form number 10AB must be filed within 30 days from the date of modification for re-registration application. When objects of the trust are modified, then you will have to make application for re-registration in form number 10AB within 30 days from the date on which objects are modified. Again, these are formalities which is to be done, which are to be completed. So one may note carefully and just see that you don't miss out. In fact, now all those chartered accountants which are doing tax work of charitable trust will have to keep one checklist ready whether all this is done or not, and see that the trust complies with this. Now, modification of objects, many times it must keep attention of the trust to apply for re-registration. Many times, if chartered accountant is doing only tax work, they may not even inform the CA that we have modified the objects of the trust. Through another CA who is doing charity trust, charity commissioner work, he may get the objects modified. But the person who is filing his tax return would not know that objects were modified and re-registration application is not done. So every year CA handling tax work of charity trust must flag all these points before the trustees or accountant and say that if you do any of these, please intimate so that compliance requirements can be done.
Sir, now prior permission of CIT exemption is required for modification of object.
Yeah. Now prior approval is required.
Yeah, right.
Yeah, so that is additional requirement. So then they will have to come.
Then only they can submit the application to Charity Commissioner Office.
Charity Commissioner Office does not accept the application unless there is clearance from CIT exemption. Because
accept.
I don't have the.
No, they have nothing. They have nothing to do with CIT exemption order. They will amend. But if suppose trust is registered, the trust should obtain CIT exemption prior permission for making.
So that danger
amendment in
is.
object.
So that danger is very much there. Suppose an advocate or CA practicing in Charity Commissioner Office is not doing tax work. He will file the modification of objects, petition or application or form with the Charity Commissioner. Charity Commissioner may approve. And here the approval of the CIT exemption may not have been taken. So that is why it is necessary to educate even the charity trust that if you modify your objects, intimate to us in advance so that we can do the compliance with the tax office also.
But the charity advocates practicing, only 2% are registered under Section 12A. So they cannot know which is registered under Section 12A or not.
Yeah, true.
Sir, I think this date of application has been extended to 30th September.
Sorry?
Date for re-registration has been extended up to 30th September 2023 now. By circular number 6, dated 24th May.
This 30th June was extended to 30th September.
It was 25th November 2022.
Yeah,
It has been further extended up to 30th September 2023.
23.
Yes, by circular number 6, dated 24th May 2022.
So I am not aware, frankly. If it is extended up to 30th September,
Those were left out by mistake. They still have a chance, last chance.
there I think there is it an extension or is it a circular clarifying that you can file it up to 30th September? It should be extension under section 119, then only the extension will work. Otherwise there will be litigation.
Circular reads like this: clarification regarding provisions relating to charitable trust. I mean, it's a clarification, but it's a circular number 6 dated 24th May. And it clearly says that those who are left out, they can still apply till 30th September because it was causing hardship.
So it is a relief under 190. So if any of your clients are still left out, you can use this facility up to 30th September. 1 month at all is still available to you. Yeah. Okay. 1080 must be filed before expiry of 6 months. Now these due dates I will omit from discussion. I understand that unnecessarily on due dates let us not spend time. Let us spend time on the amendments which are substantial for the purpose of computation of tax. So these 2 slides I am omitting. You may see the due dates are given in these slides. I am not discussing it right now to save time and focus on. Only remember this, that a 16-digit unique registration number is required to be issued to the charity trust. So once you register, you must have 16-digit unique registration number, URN. And lastly, when you apply under section 12A, whether you can simultaneously file application under section 80G. Previously it was not allowed, but now they are taking both the applications simultaneously. So otherwise, for the interim period, you cannot take donation, or donors will be averse to give donation. You can put both the applications together and you will get registration even for 80G. This is what I was indicating, that if you look at the amendments which are made in the last 4 years, in fact 5 years, but 19 the amendment was very small. There was only an additional condition inserted in section 12AA in relation to grant and cancellation of registration that was incorporated in section 1023C. In 2019, for grant and cancellation of registration, whatever conditions were there in section 11, they were incorporated in section 1023C also. But from 2020 you can see, and I think this chart again is very relevant for everybody, because every year they have amended something or the other, and they have made it so complicated that you forget in which year the amendment came and you forget to comply with. So we start with 2020, existing trust to apply for re-registration under section 12AB or 1023C. Apply for renewal of registration under section 12AB at least 6 months prior to expiry of 5 years. Now this condition was put in this section, but the amendment gives you extension of time up to 30th September 23. So those trusts which are left out can even now put their application up to 30th September 23. Once you are re-registered, every 5 years you have to renew your registration, but the application must be made 6 months prior to the expiry of 5th year. Then coming to 2021, conditions for claiming corpus donation and loan fund as application of funds. Now again, this is for listing. We have already discussed this, that corpus donation cannot be given corpus. When you make corpus donation to another charitable trust, it will not be allowed as application of fund. That is condition. If you apply for the objects of the trust from loan taken, at that stage it will not be treated as application. But if within 5 years you repay the loan out of the income of the trust, at the time when you repay, it will be allowed as application of funds. No carry forward of deficits. I think this point we have not discussed. Important point. This has come in 2021.
But
With
there is
effect from
there is a decision of Supreme Court that carry forward of deficit can be set off in next financial year.
But now with this amendment, that Supreme Court decision will be rendered null and void. Because now, and that is why they have amended, that if there is a deficit, you have overspent in current year, and there is deficit, you can't carry it forward to next year. So take example of a trust who had surplus in year 1, say 15% was accumulated. In year 2, it spent the amount of income fully plus 15% accumulation of last year it spent. So in the second year it will show deficit. Now this deficit we used to carry it forward. There is a Supreme Court decision allowing it. Now they have amended this section and said that deficit will not be allowed to be carried forward anymore. Next is 2022, introduction of section 115 BBI to tax specified income at 30%. The specified incomes, are what those income from anonymous donation, business income if it exceeds the prescribed limit, or now with Ahmedabad Urban Authority decision, a further dimension has been added. You may discuss in a separate session, because that judgment will require full 1.5 hours. So that judgment says that suppose your business receipts are within 20% of total receipts, but the goods and services that you have sold, you have not sold at reasonable price, you have earned more than reasonable profit, then also the business income will be taxable at specified rate of 30%. So look at that Ahmedabad Urban Authority's judgment. If you are doing tax returns of charity trust, it is a very important judgment. It has divided all the categories of charity trusts into 5 categories. One is government charitable trust. Second is charity trust of, an example of Institute of Chartered Accountants of India is given. Second category, that we have surplus from students' education. So the department said that this is unreasonable profit and it must be taxable. But Supreme Court said that if you see per student collection, it is not unreasonable, because the number of students are 8 lakhs, 8.5 lakhs. The total surplus from student activity is huge. But if you see per student surplus, it is not unreasonable, and therefore Institute of Chartered Accountants will enjoy exemption under section 1023C. This is adding a very important dimension, particularly for general charity trusts. If suppose they do business, even which is incidental to the objects of the trust, but in unreasonable profit, then also special rate of tax will apply. Next is penalty under section 271 AAE on application for the benefit of specified person. So one more dimension added by Finance Act 2020. So far the situation was, once you spend any amount for the benefit of interested person, trust used to lose exemption. Now trust will not lose exemption, but if you have spent 50,000 for benefit of interested person, 50,000 will be taxable, and over and above that penalty will be leviable on application for the benefit of specified person, penalty equal to the amount spent. So if your volume is very big, this penalty is not very harsh, but if the volume is very low, penalty could be harsh if you have spent some like 10,000 or 50,000. Then next is the amendments done in 2022, due date to file form number 10 and 9A. This due date will be 2 months prior to the due date for filing the return. In fact, if you look at the wordings, Finance Act 23 says that you have to file form number 10 and 9A 2 months prior to the date of filing of return. So if I file the return on 15th September, I have to file form number 10 or 9A before 15th July 2023. So that is the implication of this. They have given a reason why it is required to be filed 2 months before the due date for filing return and not with the return. They say that auditor has to certify this. So if it is to be accompanied in the audit report, then it is required to be filed 2 months prior to the date for filing the return. In fact, according to me, it does not make any difference even if it is filed along with the return of income, but they have made this condition and one will have to remember. This we have already discussed, cap of 85% of the eligible donations made by a trust to another trust as application. So that 35 lakhs example I gave, only 85% of 35 lakhs will be allowed as application. And lastly, provisional registration can be taken before even commencement of the activity. So this is permitted even before you start activity. You can seek provisional registration, which will save you the efforts of year. If you can give mic, it is better.
For Form 10, the due date, again in Notification 6, it has been specified that we can file it along with the return.
There is a notification?
Yeah, Notification 6 that came, no?
Yeah.
Circular 6.
Okay. Then this is for the benefit of all participants, and let me tell you that I am not looking after compliances, so these due dates I am not tracing. But my object to take up this topic was to apprise you of computation of income where this, so thanks to the members who have pointed out. Compliances, you may check wherever there are extensions. This is a good information from the member. Yeah, now I think, see, I have taken these amendments year-wise, but we have already discussed every amendment, thinking that you may feel very uncomfortable after a particular time. So if you want to discuss, we can discuss again, but this we have already discussed. Year-wise amendments I have separately put in the slides, which we have covered in detail. See, after this 22, after this 23, everything that we have discussed this year. Only one more point now, just like TDS certificates, donation receipts are to be digitized. You will have to find this form number 10AB, which again I am told it is not, sorry, rule 18AB, you are required to file form number 10BD electronically, giving details of all donations received. Now when I have given donation to a charitable trust and I claim it under section 80G, I will get this deduction only if the trust has filed form number 10BD. Because today, if somebody has deducted tax at source from my income, if that person has already filed TDS return and there this TDS is reflected, it will automatically get reflected in my form number 26AS. Similar mechanism they are introducing for donations. That previously it was not possible for them to verify whether a person has given genuinely donation or not. Now if the trust files electronically the statement of donation, giving name, address, permanent account number, permanent account number of the donee, I think in AIS or in the pre-filled return, the donation should automatically be reflected. But if he has not filed this form, probably it will not be reflected in apparent adjustments under section 143(1), they may make adjustment. So for the beginning 1 or 2 years we may face it, but later on every donor will check with the trust whether the trust has filed form number 10BD on time. Otherwise it will not be reflected and you can't claim that 50% deduction under section 80G. That will be the implication that department has already communicated.
Sir, for financial 22-23, if trust has not filed form 10BD, the donor will not be eligible to get 50% exemption because he is not able to generate URN for donation.
Better mic दो क्योंकि वहाँ से आवाज नहीं आती है.
Sir, for financial year 22-23, if trust has not filed form 10BD, then the donor will not get exemption of 50% in absence of URN number.
Yeah. True. That is why I am cautioning that for the trust it will be very onerous to file this form. Otherwise the donor will suffer. And where huge donations are given, it will have serious implication. They will make adjustment under 143(1). They will levy tax, levy interest and give notice for penalty also.
One more bigger issue now.
Yeah.
If suppose gross receipt of trust are 20 lakhs and they have received only single donation of rupees 15 lakhs, then trust will also receive notice. And if suppose a salaried person having salary of 20 lakhs and he has given one single trust to 15 lakhs, then both will get notices.
Yeah, the transparency is crossing limit and therefore everybody should understand that now government has started utilizing artificial intelligence more than we use. And our interest income gets reflected in AIS. Our donations will get reflected in AIS. And if it is not reflected, it will be completely transparent procedure after some years. And it will be, and that is why every person filing return must check AIS first, form 26AS first before filing the return, so that you are sure what deductions and what credit for tax you are going to get.
Sir, excuse me. At present, none of the statement is reflecting any of the donation, neither AIS nor 26AS. The trust is supposed to pass ARN to the donor. Then only, and after quoting that ARN in their personal return, ATG will be permitted.
So that may be the process for going forward in AIS also.
That may be in later years. In coming years it may be, but right now as far as 23-24 years assessment is concerned, it is on the basis of ARN certificate which is supplied by trust to the donor. On that basis only they can.
Yeah. Everything they want to automate. So going forward, we do not know how much information will be directly collected and how much in fact we are required to fill up in the return of income. I think we can conclude here because there are some case laws which would take very long time, and at this point of time continuing for longer time would not be appropriate. Thank you. Yeah.
So one question. Sir, this is regarding section 13th of section 3. So we have discussed elaborately that if certain payment is made to a specified person, then the entire exemption won't be forego. It will be only to the extent of the exemption, only to the extent of expenditure. Now sir, my question is, now once I make an expenditure, what will be disallowed? Whether I won't be allowed application of income?
So the amount which is spent for the benefit of interested person will not be considered to be application of fund, and that amount which is used for the benefit, because see, I will give you an example, it can still escape tax if this provision is not made. See, take for example, income of a trust is 1 crore, it is required to spend 85 lakhs, but it has spent 85 lakhs for general charity and 1 lakh is spent for the benefit of interested person. So total 86 lakhs is spent. Now in this case, if they simply disallow 1 lakh, it does not make any difference to the trust, because trust is anyways required to spend only 85%. Right? So what they are providing, that this 1 lakh will be treated as income and tax will be levied. Over and above that, under section 271 AAE, 100% penalty will be levied.
Yes, the penalty is okay, but how can expenditure be treated as an income? I made certain expenditure under section 13(3) to a specified person, be that a trustee, but for that expenditure can be treated as an income. Yes, it won't be allowed as an application of income.
When they make deeming provision, the deeming provision cannot be challenged. The reason is that, see, what they are saying, that we don't want to permit charitable trust to operate for the benefit of interested persons. And if you do that, we will tax income in a particular way. So if they make specific provision, see, if assessing officer tells you that according to me this is income and I want to treat it as income, but there is no provision in the act, he cannot do it. But this deeming provision specifically provides that it will be treated as income and it will be taxed. And they are adding a line, because we complained that you are taking away the entire exemption in case any amount is spent for the benefit of interested persons. So they have come out with, in Finance Act 23, you can see the line, okay, to the extent of income spent for the benefit of interested person. So full exemption will not be lost. On the one hand, they have given benefit. On the other hand, they say that if you spend for the benefit of interested person, you pay tax on it. That is why.
So the notifications are issued by the CBDT.
Yeah.
These are notifications against the law. The Act says that you have to submit the part before 31st August. Notification issued there, you can submit the part up to 31st September.
See, now here Supreme Court said that any notification which is in violation of the Act is not valid. Right? It is void ab initio. But at the same time, any notification which extends the due date for filing a particular form, it is issued under section 119, where CBDT has got power to give relief in case of hardship. So if CBDT utilizes that power for giving relief, you are aware that even income tax return filing date they are extending. Now section 139(1) very specifically lays down 31st July, 30th September, 30th November. But many times, suppose some flood comes or there is earthquake around the due date, they extend it by 5 days. Sometimes if their internet is not working, they extend it by 5 days.
So that district also, sometimes if suppose flood is in Surat, they are extending due date for Surat city only.
So that power they have got, but suppose they interpret law which is exactly in contradiction to the provision in this section, then that notification or circular is not binding on the officer. Even the officer can ignore it. But here it is granting of relief. By extending the date, they are not going against the section, they are granting relief, and the power is given under section 119. So it is not in violation of the Act.
That's your short comment on that noble Supreme Court judgment.
Sorry?
Noble Education Society Supreme Court judgment.
No, I can't hear without mic.
Noble Education Society Supreme Court judgment. Can you give some comments, sir?
Noble Society, what is the?
Education Society, Supreme Court given judgment recently.
Yeah.
Any comment from your side, sir?
No, half of what you speak is not. Please bring it closer.
Noble Education Society judgment recently given by the Supreme Court.
Yeah.
I want your comment.
But does it deal with extension of due date? It does not deal with extension.
No. That is a different issue.
Sorry?
That is not dealing with extension. That is dealing with the trust.
Other than extension.
Other than extension, sir. Other than extension.
Other than your voice is not available.
Can you repeat again?
Supreme Court recently given judgment in the case of Noble Education Society.
Yeah.
In the history of the judgment,
Yeah.
first time they are given the prospective effect. Not
Again,
prospective.
you are putting mic that side. So, is mic close to the...
Sir, first time they are given prospective judgments. Generally, you are following the retrospective amendments.
Yeah.
So, I want your comment for the judgment.
No, actually when Supreme Court gives judgment, it should apply to all pending cases. It can't be prospective. So it is, as you rightly say, history that Supreme Court says that it will operate prospectively. Right? So now from the organizers there is a note to conclude. And if you want, you can send me queries on email. I will answer them. Thank you. Thank you so much.
Thank you, sir. I would once again request all the dignitaries to grace the dais again. Thank you, sir. It was indeed an insightful session, and I'm sure we all have many takeaways from this. Now I would request CA Ramesh Chaudhary, sir, to present a souvenir to CA Nihar Jambusaria, sir, as a token of our continued appreciation. Thank you, sir. I would now like to call upon CA Pawan Jaju sir, immediate past chairperson of Amravati Branch, to present a memento to RCM CA Abhijit Kelkar sir, who is also the session chairperson for today, as a token of our appreciation.
साइड क्यों साइड
Thank you, sir. I would now like to call upon CA BM Khandelwal sir to present a souvenir to RCM. CA Sanjay Nikam sir, who is also the session coordinator for today, as a token of our appreciation. Thank you, sir. Now, just to remind you all that there is a lucky draw after our session today. This lucky draw is sponsored by Om Jewelers Akola, and winners will bag something which always glitters, and yes, that's gold. I hope everyone has put their coupon in the box that was kept yesterday downstairs, and most importantly, you have to be in the hall in order to win. So guys, just stay back for a little while. After this, now it's time to acknowledge the untiring efforts and relentless vigor of those who have made this mega event successful. Those who have strived hard and worked for countless days to organize our travel and stay here wonderfully, and also give us personalized kits and contents. I'm talking about the travel, hotel and stay, and lastly, the kit committee. It's time we appreciate their efforts now. I would request all the dignitaries to acknowledge the efforts of travel committee first by giving them a memento. So everyone from travel committee, Amravati and Akola branch, please come on stage. Guys, let's welcome them with a huge round of applause. They've done a great job. Thank you. Now it's time for the hotel and stay committee.
मेरी पूरी टीम है एक्चुअली 5 लोगों की, बट कुछ अदर कमिटमेंट्स की वजह से वो यहाँ पे है नहीं अभी, इसलिए उनकी तरफ से मैंने लिया है. ओके, थैंक यू.
So I understand that no one from hotel and stay committee is present over here, but we still appreciate their efforts. Lastly, the kit committee, all the members of kit committee present here, please come on stage. Let's welcome them with a huge round of applause. I understand stay committee is still working, so again, that's a good job.
Yeah, wait.
Hold.
Thank you.
Appreciate the employee of the branch who have worked very hard to make this event successful. Dahake sir, Manoj sir and Shubham sir, please come forward. Amravati Branch, Pooja ma'am, Raksha ma'am and Vinod sir. Those are not present here, but we'll still appreciate their efforts. Thank you. Lastly, it's time to acknowledge those who believed in the success of this mega event and ones who supported us, our sponsors. And we are very lucky to have with us the sponsorship of Ridvi Corporate Solutions, Vayana Private Limited, Bond Bazaar Securities Private Limited, Buldhana Urban Cooperative Credit Society, DR City, Taparia City Centre, State Bank of India and Taxman. I would request all the members from these firms, whosoever are present here, to come forward. Anupama ma'am, please come forward to accept this on behalf of Taparia City Centre. And Bond Bazaar Securities team, I'm given to understand those are the ones present here. Please come forward. As they have sponsored our event, the least we can do is welcome them, give them a huge round of applause.
पंकज
Coordinator, RCMCA Sanjay Nikam sir, Chairperson of Students Committee Academics, to present vote of thanks. So I would request CA Seema Bhayati ma'am, Chairperson of Akola Branch, and CA Vishnukant Soni sir, Chairperson of Amravati Branch, to please come forward.
गणगण गणात बोलते गजानन महाराज की आवाज आहे अजून यस एनर्जी आतापर्यंत टिकवली आहे and ladies and gentlemen, it is matter of immense pleasure and honor for me to be here with such a decorated dais with such a towering personalities like our past president Nihar Jambusaria sir and our senior council member Abhijit Kelkar sir. Friends, we are concluding now 2 days conference at Shegaon, and this is the last session. And let me tell you very honestly, though this is the last session of the 2-day conference, Nihar sir engaged everyone with his deliberation, and he kept the session interactive and kept everyone alive, and asking good questions to him and also answering all the questions successfully and satisfactorily. Also, I appreciate the contribution made by Abhijit Kelkar sir. In his short and concise keynote, he masterfully explained the intricacies surrounding charitable trust, providing us with a deeper comprehension of the subject matter. I herewith humbly request each one of you, let's carry forward the lessons learned in improving our professional performance. I extend my sincere thanks to our participants and everyone involved. Let's maintain the spirit of engagement, learning and growth as we progress in our professional journey. Thank you very much for being with us. Thank you very much.
Yeah, thank you so much, sir. Okay, we'll proceed to the last part of today's session, which is the lucky draw. So I would request all the RCMs present here, RCM CA Saurabh Ajmera sir, CA Murtuja Kachwala sir, to please come on dais.
So our first lucky draw goes to Raghav Khator, membership number is 137327.
Rules are rules.
Our next chance to Deepika Agarwal, membership number 169450. Next lucky person is Riddhi Panjwani from Akola.
भाग्यश्री रानडे.
Next lucky person is Harshad Darodkar, membership number is 188170.
Next is Milind Mumbai 101252.
We have today's first lucky person here, Milind sir.
CA Pankaj Ladnia, Vice Chairman.
Next lucky person is Mohit Ahuja from Amravati. Membership number is 197004. Next lucky person is CA Manish Pahalwani, Paratwada. Membership number is 173507.
Next is Lakshmi Shinoy, Mumbai. Lakshmi Shinoy, lucky ma'am, I ma'am.
Lucky ma'am, very lucky.
Next lucky winner is Umesh Agarwal.
Everyone is expecting party from Umesh bhai.
पूरे गोविंदा ग्रुप को मिल गया.
Next name, Omkar Patil, Mumbai. Congratulations. कितने हो गए? सुमित भाई कितने हो गए? Congratulations, Rashi. सर हम अकोला और मुंबई दोनों को बैलेंस रख रहे हैं. Congratulations, Rashi. आजा आजा. One more, CA Midun Tekare. अब तो पार्टी बाकी है, दोनों लोग मिली भगत हो गई है.
जुगाड़ अरे मेरा पास निकालना है.
कितने बचे? चांस लगता है हमारा. मेरा भी चांस दिया.
पैसा वजूद .com है.
The last lucky name, CABN Tambi sir. One more chance. सबको खुशी हो रही है, कोई तो नहीं रहे करके. Last. CA गुलराज ऐलानी, कामगांव. है क्या गुलराज भाई? आइए आइए. Congratulations. Congratulations.
Here in the hall, request you to please come forward. I would request all the dignitaries to please
One more,
the dais.
attention. हमारे सबसे पुराने एम्प्लॉई हमारे ब्रांच के साथी राखी जी का सत्कार